Hi, this is Joseph. It's Thursday. It's September 24th. I wanted to make this quick video just to show you how my trading system is performing in the current market environment over the last couple of days, last 2 days here. So what will help you solve these problems? So again, if I'm looking at just a candlestick chart, I will normally stay away from trading inside of the middle of a consolidation range that I can see, like this. I usually won't trade candles like that. So you can see for the next few candles afterwards, it starts to move back down. And if I put a tight stop on there, on a trade like that, and I'm trying to go long, I'm going to get stopped out. And inside of consolidation, this happens quite a bit. You get these false positives or candlestick patterns and candlestick charts and patterns that look like they're going to go in one direction, but they fail. And inside of consolidation, it can get really choppy, and that's when traders usually tend to chew up or grind away at their account, and they give back profits. So I avoid this. I usually avoid trading inside of the middle of consolidation. So the point and figure chart, for the most part, with all that consolidation, look like this throughout the London and the early New York session. When price starts to look like that, there may be a few little opportunities in here to try and trade, but the ranges are getting so small and the price swings are getting so small that it's not likely to reach any of the targets that I'm going to trade to anyway. So there's no point in me trying to allocate any capital and put on a trade there when it's just going to go sideways and I don't see enough momentum to justify a trade. It's not likely to go consistently to the take profit level that I'm trying to trade it to. I want to trade when there's more participation, there's more volume. I want to see a move to the downside that is a relatively failed attempt to go any lower, perhaps with a lot of volume, but not much of a distance from the change from the actual low to the new low that it prints. There isn't much of a change. So there's a great deal of effort and a great deal of momentum behind the move to the downside, but it just doesn't go anywhere. It's not very far. That's usually a clue. Very often on the reversal candle, you'll see volume sort of pick back up again. Sometimes it'll be a strong candle. It really depends. Each one of those is going to be a different setup. Sometimes it'll happen due to news. Regardless, it doesn't really matter. What we're looking for are the signs and the clues of some kind of turning point. So I had a clear support low here, and I was watching price, and I knew that, if the London session was going to remain choppy, that I may get an opportunity during the New York session, and it started to develop as we led into the New York session, and that's what you see here. So again, it was a move to the downside. We're counting waves. Remember, I talk about counting waves. For that, I would use the candlestick chart. For the candlestick chart, I'm also going to be using volume. It's going to be based on the futures contract for this particular currency pair. Again, the pound dollar, I'm going to be watching pound futures. I saw volume moving back in as it started to approach the lows. Again, a lot of effort, very little distance covered, very little reward, a poor close. It started to move right back up again, and I just had to wait for the full reversal. So with point and figure, I have very, very clearly defined support and resistance levels that I would trade off of. And I'm always taking a second quick look at the candlestick chart or bar chart. You can use bar charts. A lot of people use bar charts. But what I'm getting at is the timing. It's all about the timing. And based on the data here, this was my target, 60. Normally, I would trade it to, let's say, a psychological level if I didn't have enough data to justify some kind of count that it would give me anything beyond the 2750 area. But today, it gave me an opportunity to trade it to the 2760. So let's move on. This paid 30 pips. Let's look at the euro dollar. The euro dollar created, again, a similar pattern, a move to the downside. It created a spring. I'll show you that on the point and figure chart. And then here we had that one candle that was a strong bullish candle with a lot of volume. What you see on the pound dollar was a short-term low. This formed a base that went on for quite a while. And this gave me more information so that I could trade it to a different type of target. 80 was my target. It happened to be a psychological level, but it also, based on the data that I had here, it gave me an opportunity to trade it to the 80. This was a different trade. You can see that the way price behaved and the way price moved was very, very different. So an entry of 46 to 80, this paid approximately 33 pips. And we have two other currency pairs that had a similar setup and paid approximately the same amount. So we're up over 100 pips for the day, even though price and the trading action looks like this. It looks like a lot of chop and a lot of sideways behavior. There's only one or two opportunities, according to the way I trade it. That's it. That's all I have to do. There are other days where these trades have created bigger, better opportunities, as you've seen in many of the videos, and we could close the day with 100 pips, 300 pips. It depends. Every day is different. Today was very different. It didn't go very far, but I just had to wait for the right location and the right time, understanding how the market works and how we see these reversals take place. These reversals, whether they're at resistance or support, happen in a very particular way. And you have to be able to understand that what you're witnessing is a reversal. Why would the market turn at certain levels, and can you participate and identify that opportunity? And again, going back to my point and figure chart, this is everything to me. Like, this gives me clear levels of support and resistance that I know I can trade off of. It clearly shows me a base forming. It clearly shows me the spring. Matching that up with counting the waves and using the futures volume. So in this case, if I'm looking at the euro dollar, which is what we're looking at now, I would look at the euro futures and then look for those clues, that sign of the turning point. Again, a lot of volume, a lot of effort, a move to the downside, and very little reward in this case, and then the reversal where we saw a lot of volume picking right back up, and I just had to wait for the right time. Now, this is what I'm teaching in my trading course, and that's why I received the question, how is your trading system performing in the market environment over the last couple of days? So again, we're still up over 100 pips. We haven't had any losses, yet the market looks something like this. This is the pound dollar now. This is a clear level of consolidation that I'd be able to identify that this is just moving sideways. So I teach you how to read all of this. I teach you how to read these turning points. I teach you how to understand when you could expect a better opportunity. If you have any questions about any of the information that I share in this video, please post the comment just below this video. If you have any questions about my trading course, please go ahead and post the question just below this video, or you can send me a private message, and I'd be more than happy to help.